2024 was a strong year for stocks. Will that bullish sentiment continue into the new year? 2023 was pretty strong as well. Joining us now is Tom Sosonoff, TastyLive founder and CEO. We just had Paulson on, not Jim Paul. Yeah, Jim Paulson. Not Hank Paulson. Not Pat Paulson.
Not John Paulson.
Not John Paulson. He thinks maybe not quite as great, and maybe a correction in the meantime. What are retail clients and their actions indicating to you at this point, Tom?
At this point, Joe, they're staying. I mean, they had a good year. This was a great year for retail customers, obviously. So I would say that general consensus is they're maintaining a long bias. I think that's pretty obvious across the board. Customers are, at this point, retail customers would rather be long and be in the market than not be in the market.
December's usually good. It's always supposed to be good. It was not good. Was that normal and healthy the last month?
Healthy, yes. Maybe it wasn't as normal because the rest of the year had been so strong that I think a pullback was just kind of, I don't think a 1 or 2 or 3% pullback really is a bad thing or a surprise to anybody. But I think, given if you look at the entire year, it's a pretty impressive display this year. So I think the little tiny pullback in December didn't really mean anything.
What are going to be the most important macro forces for 2025? Do you think do you care about those, or you just watch the action of the market itself and not try to explain it?
Yeah, I'm a trader. I couldn't care less about macro forces because, in the world of efficient market theory, which is kind of where I live, it's the market takes everything into account almost instantly as it happens, or before it, in some cases before it even happens. So I think everything's kind of priced in. If you want to look at, macro forces, those are always fun for engagement and fun for talking about. But I think from markets and trading, the market's going to do, the market's going to do whatever it wants, regardless of macro forces.
Right. But I think that if the 10-year were to continue to back up or if... Yeah. I'm not sure you even call that a macro force because we don't need to say why it's happening. But if it were to happen, that might not be a good sign.
I agree with you. If the 10-year were to break below, right now it's trading, it's up the last 2 days a little bit, heading back towards the 109 level. I thought it would hold at 110, but I think at this point, if it were to break 108, 107 in that range on the 10-year, and you're looking at, plus 5%, I think that would disrupt the markets a little bit. I think that the one risk out there is that the 10-year and the 30-year are hovering at levels that make people uncomfortable if they break down from here. I agree with you there.
Because I think in general, do you think that the economy at this point is at least moderating from all the fiscal, overspending and the post-pandemic stimulus? So maybe I don't know if 3% is possible, and here we are talking macro again. But if the 10-year continues to go up, even though the economy doesn't look like it's quite as strong, then that is indicating that we got like a double whammy. We got maybe stubbornly high, price inflation, and maybe a slowing economy, and that's usually the worst thing for equity.
I think that right now that's kind of what most traders are looking at. There's a little bit of the growth stocks have been so strong, and the concentration of strong stocks has been carrying this market that in spite of what happens with respect to the bonds, the bonds have dropped pretty significantly, both the 30-year and the 10-year. And so when you start to look at that, it puts a little bit of a dark cloud over this market. But so far, the growth stocks have been able to kind of dominate the story. And I don't know if that changes anytime soon. But if the bonds do break down and rates do go up to kind of new highs in rates and new lows in bonds, I think that makes for a tough sledding going forward.